This is Matthew Cratter from Trader University, and today I want to talk about one of the most prominent crypto hedge funds blowing up over the past 12 months. I'm talking about Multicoin Capital, which got completely wrecked in 2022 for obvious reasons. But I want to begin with a riddle, or what's actually a very good indicator. What's the best way to know if someone is about to steal or lose all of your money? The answer is they're a crypto entrepreneur and they start publicly bashing Bitcoin. This is exactly what Scam Bankster Fraud did with FTX, saying that Bitcoin has no future as a payments network. And just 7 months after he said this, he was arrested in the Bahamas for all of the fraud that he did. We're going to talk today about Kyle Samani, managing partner of Multicoin Capital, which, as I said, is one of the most prominent, or used to be one of the most prominent crypto hedge funds. As I like to call him, though, I prefer to call him Kyle Salami. I think it's a better name for him. And he had this quote just in about a year ago, in April 30th of 2022, a little less than a year ago. Bitcoin will be irrelevant within a few years. And the curse is intact because immediately after saying that, his hedge fund lost over 91%. It looks like he was holding a lot of FTT, which are the FTX exchange tokens. He was also holding a lot of Solana and Solana-based tokens. And it looks like his risk management was not that good. It's very, very difficult to lose 90 cents on the dollar. That takes a special skill. There have been a lot of articles about him. I like this one especially, why Solana's frequent downtime doesn't bother Kyle Samani or Salami. The real reason it doesn't bother him is because he got paid 2% management fee and 20% of profits. Presumably, this is how hedge funds work traditionally on his Solana investment. And the really interesting thing about this is this was investing other people's money, what's called OPM in the business. So he basically had this free call option, made a lot of money doing very, very reckless and stupid things, and then ended up blowing up like these guys always do blow up, especially these guys in crypto. Many of you have probably heard about the Peter Principle, which is this idea that people will rise to the level of respective incompetence. They'll basically be promoted until they're at the level where they can't do a very good job. I'm going to, in the spirit of the Peter Principle, I'm going to coin the Salami Principle after Kyle Salami. And this is this, that a hedge fund will have its greatest drawdown shortly after receiving its largest capital inflows. So for example, you have a hedge fund that goes from $10 million assets under management to $2 billion assets under management. And right at the peak there, everyone will decide that this particular manager knows exactly what he's doing. They'll give them an extra slug of $2 billion, new inflows right at the peak. So this hedge fund will now have assets under management of $4 billion. And that is when, according to the Salami Principle, that is when the drawdown will commence and the hedge fund will crash 90%. And here's the thing, it will end up destroying more capital than it ever earned. The very early investors may still be up, but most of the money that went in will have been completely incinerated, as Kyle Salami did to his investors. Kyle Salami gave an interview last year where he talked about how to make it in crypto. Presumably the real way to make it is to trade with a lot of other people's money, but he also managed to say that you should zig when everyone else zags. And I think he succeeded in doing just this. If we take a look at this chart, the yellow line is the Bitwise 10 crypto index, which is a typical benchmark for crypto hedge funds. The gray line right here is Bitcoin itself, which was down 64% in 2022. This index, this Bitwise 10 crypto index, was down 67%. And fortunately, Kyle Salami was zigging when everyone else was zagging. That's how he managed to massively underperform both Bitcoin and the crypto index, the Bitwise 10 crypto index, and he managed to underperform both of them. What did Kyle Salami miss? He missed, even in the name of his hedge fund, Multicoin Capital, he missed the very basic fact that there aren't multiple coins. There's just Bitcoin and there's unregistered securities, and he unfortunately learned this the hard way. And part of this learning process was getting in bed with Sam Bankman-Fried and having a huge percentage of his assets under management of the hedge fund custodied at FTX. This is one reason that Salami lost so much money last year. But this is what happens when you're in the bed with crypto. You're in the bed with a lot of very bad characters like Do Kwon, like Sam Bankman-Fried, and like Kyle Salami. So I want everyone to remember this during the next cycle when we hear about the new crypto investing genius, that cycle's version of SBF, Do Kwon, and Kyle Salami, because history will rhyme, history will repeat itself here, and we're going to see the same thing happen in the next bull market, which of course will be kicked off by Bitcoin, which really is the coin to rule all other coins. So I want you to remember this when we're in the heat of the next bull market and you see these things. I want you to remember Kyle Salami and what he did to his investors' money, along with Do Kwon and scam bankster fraud. If you found this video helpful, be sure to hit that subscribe and like buttons. Hit the notification bell if you want to be notified when I publish my next video. And let me know your questions and comments in the comment section below. Thanks a lot for watching, and I'll see you in the next video.